Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, August 23rd, 5:31 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Wrapping up a strong week in the market with a good final closing day off the back of Jerome Powell's speech at Jackson Hole. Let's get into it. State of the market, we're in an uptrend. Check the trend gauge over here. The coveted four green arrows reflecting that all five of the major indexes are trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. And market leadership also flagged as bullish. Plenty of leading candidates acting very well. So what happened today? As I mentioned, all eyes were on the 10 a.m. Eastern Time speech from Jerome Powell, and he delivered what the market was looking for despite two big attempts intraday to sell it off. We closed in the upper 80% of the range, and mid caps and small caps really took the baton as far as leadership today, similar to what happened a few weeks back when we had a CPI report that showed inflation no longer an issue. I'll get into really the key quote when we get to the tail of the tape, but you can see from the nice green tone of the closing numbers on the day what went on today. So 21 over 21 list up. If we take out Kava, which was up 19.6% on earnings, the other 20 were up an average of 1.1%. With Kava, the 21 up an average of 1.98%, 14 up, three neutral, four down. The big eight up 1.37%. The RG8, this is what we're looking for, up 2.34%. Good showing from all eight components. These are eight growth ETFs that we track to keep our finger on the pulse of what's going on with growth stocks from a broad perspective. S&P 500 opened up 0.6, jumped up on Powell's speech, made the highs shortly after that. And as I mentioned, two attempts to pull it back, but both times responded with a rally. Equal weight, even better, up 1.27%. NASDAQ 100, the actual laggard index today. Recall on that CPI report last time when small and mid caps took off that big cap tech sold off hard. Big cap tech was lagging most of the day today, ended up with a good closing number, but we're on the lookout. One of our keys for next week is going to be for that rotation into mid and small caps, and we've been adding that exposure to mid and small earlier in the week and a little bit more today. We'll talk about that as the video progresses. So up 1.1% on the NASDAQ 100, equal weight, just a tick better than that. Dow up 1.14, mid caps up 2.2, Russell 2000 small cap up 3.2, Global 60/40 up 0.96%. Our flagship portfolio, GROTECTION, up 1.69% on the day. All right, let's get into some of the details, and we'll start off with the S&P 500 here. And you can see the outside negative reversal yesterday, just trying to shake some stocks out of weak hands going into the Jackson Hole speech. We got all of those losses back and then some today, up 1.15%. Let's go to a 60-minute chart here. And this 56.43 level, which goes all the way back to mid-July, last time we were making highs before this most recent correction. 2 days in a row, this 56.42, 56.43 level has acted as resistance. So that's a key level that we're looking at next week. But a nice recovery today, getting back yesterday's losses, and a nice recovery. Let's take a look at the 5-minute chart very quickly. So here's the big spike up after 10 o'clock when the speech was released. Volatility kicks in. Market tried to sell it off hard, responded with a rally, lower high though. Another attempt to sell it off, but that was about all the bears had. And that ended shortly after lunchtime today. And then you can see the nice recovery most of the afternoon into the close, a couple of shakes here, but closing very high in the range today. Good reaction to what we wanted. Now, what are we looking for next week? We're heading into a seasonally weak part um, of the year, and although it is a presidential election year, which are tend to be stronger, but we'll be going through some details on September seasonality, keeping that filed away. Doesn't mean we're going to buy or sell anything just based on seasonality, but we are aware that it's there as a secondary indicator. There's the S&P 500. Let's go to the NASDAQ 100. Notice did not regain all of yesterday's losses. Uh, Weakness the last 2 days on a relative basis. Uh, Long as we hold this 50-day and 21-day moving average, remember, these have huge weights in the S&P 500, and if money is going to rotate out of them, like Meta down 0.74 today, Netflix down 0.3, Microsoft barely positive, Amazon only up 0.5%. So they did lag today. We're on the lookout. If any money comes out of these big names and goes into mid and small caps, it's really going to inflate the mid and small caps higher because of just it's like the elephant in the bathtub. When you jump in, the water splashes all over the place and overflows, and um, it really can pump those up. You'll see momentarily last time that happened. Dow Jones Industrial Average making a higher high, up 1.14%. Note lagging the last couple of weeks on a relative basis. Not today, though. Now, let's go to the 400 mid cap. So here was the big spike up last time on CPI. This was 711. Let's go back to the NASDAQ 100 very quickly. 711, where was it? Right there. That was that big outside negative reversal that put in the top on the NASDAQ. So this was the beginning of money flowing out of the NASDAQ 100. Look at the relative strength line during this period. It was relative weakness. It was a relative weak line. And then compare that back to the S&P 400 mid cap, just the opposite. This is the big key that we want to be watching next week. Now, it certainly wasn't an easy ride. We were 5 strong days up, 4 strong days up, pulled back to the 3,000 level, made a higher high, and then this big negative reversal coincided with the FOMC meeting where the market was concerned that Powell was offsides and not being proactive enough versus a possibility of a recession. But you can see if we clear that off, that big 3-day down move bounced at the 200-day moving average and has had a nice recovery, including relative strength this week, as you can see the line there. Now to the Russell 2000, even stronger today than mid caps, up 3.2%. Same situation. We had that 4 days up, consolidation, failed breakout, brutal 3 days down. Now the recovery and the relative strength this week. I can't stress that enough, that's something we're really going to be focusing on next week. So those are the 5 major indexes. Let's go to RSP, equal weight. Hey, all-time high. That's not bearish, is it? Relative strength as well. It's coming off a period of relative weakness, of course, which followed a period of relative strength. And again, same situation here. RSP outperformed when money was coming out of big cap tech after that CPI number on 7/11. The 3-day sell-off, nice recovery since then, making higher highs, not making higher highs relative to on the relative strength line. So that means we've got some room to go there if we want to continue higher. That's equal weight. Let's go very quickly to equal weight NASDAQ 100. Not a lot to see here. Hasn't made new highs, but is further above the 50-day moving average and the market cap weighted. All right, let's flip to some other inter-asset correlation. We'll start off with the U.S. dollar. If the dollar gets too weak, is that bad for stocks? Well, we'll be keeping an eye on that. The dollar bounced yesterday, but made a lower low today. It's back near right at the lows from last December. Weak dollar, good for stocks. So we'll see if it continues. How about the VIX? back below 16. That's where we want it to be. Ran into the declining 21-day moving average yesterday with a little bit of angst with coming on in Powell speak, but uh, sold off uh, harder than, and we're now below where we were on Wednesday. Let's just put it that way, and below that 16 level, which is where we want it to be. You divide this number by 16, and that gives you the approximate looking forward volatility of the S&P 500, and we want it to be under 1%, and that's where we are. So that's the VIX. Let's go to bonds. Broad bond index up on the day, yields higher. Same thing with the long bond, TLT, yields higher, mean prices are down. I got out of order here. Precious metals, gold up 1.16%, gold stocks up 1.44%. Silver up 3%. So recovering nicely over the last couple of weeks with silver after a tough sell off. And Bitcoin. I reposted a chart of weak dollar versus strong Bitcoin, and that's it's going back a couple of years. It's a nice correlation. Big move up on volume today on IBIT, breaking above the 21 and 50-day moving averages. So the setup's there, and we'll be considering adding Bitcoin back into our portfolios. Yields, DYX long bond dropping, hasn't made lows yet, however. PNX hasn't made lows either, but down 1.42%. All right, that's our inter-asset correlation. Let's get to the tail of the tape. We're clearly on the bull case. Talked about the news. Here was the key phrase. It is time for policy to adjust. And he was very dovish, very accommodative, and the market reacted accordingly. That was the key coming into today. We were looking, what was the reaction going to be? Very positive reaction. Now up 10 of the last 12 days. There was a fear that possibly this might be a sell the news event. And like I said, the market did try to sell off hard twice, but buyers showed up both times. 10 out of the last 12 days up, up 11 and 9 days. Yes, up 11 days on the 8 EMA, 9 days on the 21 EMA. Expectations remain positive with us above the uptrending 21-day moving average. Here are the resistance levels that we'll be looking at for next week. Sectors, all 11 spider sectors positive, led by builders, ITB, banks, gold and silver and gold and silver stocks, retail, and semiconductors. Zero sectors on the downside today, just the dollar and yields. A couple of changes to the portfolio. We trimmed Kava into strength yesterday, waiting on its earnings report. It blew earnings out of the water, raised guidance. We bought that back, sold it about 103, bought it back at 110. You don't have to get the best price, you have to get the right price. So we booked some nice gains, bought it back $7 higher than we sold it, but we're rewarded with a close up at 122 today. So we bought that back. CEG lagging, we trimmed that. Meta lagging, we trimmed that, and bought MidU. That's a 3x mid cap ETF. It joins the 3x small cap ETF in the portfolio. Net a small increase on our adjusted beta to 1.43%. So Monday, here are the keys to look for. S&P 500 against overhead resistance, 5642 to 5647. Those are the prior highs from July. We want to see, does mid and small cap outperformance continue? And we certainly want to avoid distribution after today, which was, I believe, a subsequent follow-through day on the S&P and the NASDAQ 100. Yeah, they're both above 1% and on higher volume. So market looking good. Very often things can look too good. We're always wary of that 2x4, but we're prepared for anything as always. So bottom line, Powell Jackson Hole speech prompts broad rally led by small and mid caps. Let's go through the portfolio, and then we'll go through the 2121 leaders and laggards. I'm also, since it's the end of a week, we're going to show the weekly charts as well. So let's start off with what we hold. NVIDIA, inside day today, shaping up nicely into earnings next week, up 3.8% for the week. Eli Lilly down today in the face of a strong market, but relative strength has confirmed the new highs, and it was up 3.3% on the week. Palantir also weak today after trying to break higher yesterday. Don't like to see this, but and it was down on the week, so stalling a little bit after this big move up after its earnings. Kava, here's the big move up, 19.6%, left a little bit of a wick for Monday. But big gap up on massive volume, 771% average volume, ends up 23% for the week. Clear breakout, cleared leader. Uber bounced at the 80 EMA, up 3% on the week, up 1.3% on the day. Ferrari continues to make higher highs, up 5.3% on the week. ITB, very nice, taking advantage of those low interest rates. Home builders looking good, up 7.9% on the week. These are all things that we own. Upstart making a higher high. Small position, uh, working on getting it bigger, but it continues to be extended and go higher, up 14% on the week. Coupang pullback today, up 1.9% on the week. Spotify just going sideways, not showing any relative strength, up 1.5% on the week. And Meta, 2 down days, failed breakout, sitting on the 8-day moving average, just barely flat on the week. So some of that momentum that it recently had, putting in a tight range flag. So that's everything that we own in the portfolio, excluding the index ETFs. We've already gone through the indexes. Let's look at the biggest winners on the day today from our 21-21 list. We're concerned with them if we don't own them. So what don't we own? That was in the top 3 on the list, and 4 of the top 5 we own. So we're in the right names. Here's Carvana bouncing off 150 and making a higher high. IoT, Samsara continuing to ride the 8-day moving average higher. And we own Race, GDX, we showed Coherent. 3 tight days, double inside day. Really like the look of this and the relative strength line and the reaction to their earnings report. Now, what from our list lagged on the week? Analam Pharmaceuticals down 1.7%. Chart still looks fine. Meta, we already showed that. Axon, we don't own this. Very tight sideways action, down 1% on the week. You can see 2 very tight weeks after the big bar from their earnings week. And Shark Ninja undercut but reclaimed the 8-day, down slightly on the day. So those are the highlights from the 21/21 list. That's a portfolio review, and that is going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION. Dual mandate is what it has. We are going to grow assets when the market is in an uptrend, and we are going to protect them when the market is in a downtrend. One of our clients called this the swan approach, sleep well at night, and we hang our hat on that, and we're very proud of it. And it's just trend following on multiple time frames. And then when the trend is in your favor, looking for the best stocks in the best sectors, plain and simple. If you're interested in this approach, reach out to us. And with that, I will wrap it for the week ending Friday, August 23rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.